So in recent times, the real estate market has experienced significant changes that have affected several businesses in the industry. Now, if you're an owner of one of the three different types of real estate business, such as wholesaling, fixing and flipping, and buying and holding or buying and leasing, the slowdown in this fixed income business has been noticeable. Now, my name's Rock Daniels, and I am the Bluegrass Realtor for all your Central Kentucky real estate needs. Normally, after renovating a house, it would be put on the market and you'd have an average number of offers of maybe 40 offers in the first day. However, in the last couple of months, due to the increase in available properties, this number has decreased drastically to maybe 10 offers in the first week. Now, despite the current slowdown, the possibility of the market crashing is not yet clear. However, looking back at the history of the real estate market, there is a common phenomenon that happens every time the market crashes, which is called herd mentality. Now, this is when everyone starts to panic and news outlets start to panic, YouTubers get on there and start to panic, and other individuals begin to spread the word that the market is crashing, the sky is falling, the sky is falling. This eventually leads to a self-fulfilling prophecy where everyone starts to sell their properties and the market eventually does crash. Now, while the possibility of this happening is inevitable, it is important to take precautions to avoid falling victim to this type of crash. Now, one group of people that suffered greatly during the real estate market crash of 2008, 2009, and 2010 were the fixers and flippers. Now, these individuals who would buy a house for a certain amount of money, put money into it, renovating it, and then sell it for a higher price. Okay, so however, during a market crash, the value of these properties dropped significantly, and they were left with expensive short-term loans on properties that were worth less than they were valued at when they purchased them. Now, they were over-leveraged and overexposed, making them more susceptible to these market changes. Now, to avoid being in this group, it is advisable to pull back on fixing and flipping projects that are overextended. It is crucial to look at the median household price in your area and avoid taking on projects that require you to sell the property for higher than that price. Now, in the Lexington, Kentucky market, for instance, where the average sales price is $300,000, it is better to avoid any projects that require selling a property for more than this amount. Now, the affordability spectrum on the higher end of the market is usually hit first, so it is advisable to be specific about what is allowed in your pipeline to avoid exposure to this part of the market that gets demolished during any real estate downturn. Now, the second step is to buy creative financing deals. For instance, you can acquire a 40-unit apartment complex in Lexington, Kentucky, where the market rate for a 2-bedroom, 2-bath apartment is $1,300 per month. Now, if it is acquired on seller financing with excellent terms and the rent rate is under market value and the occupancy rate can be high, this is a better strategy than acquiring properties that require a large down payment on a loan. So in conclusion, while the possibility of the real estate market crashing is inevitable, taking precautions can help you avoid significant losses. It is advisable to pull back on fixing and flipping projects and be very specific about what you allow in your pipeline. Now, additionally, buying creative financing deals can help you stay afloat during the market downturn. Now, my name is Rock Daniels. I am the Bluegrass Realtor for all your Central Kentucky real estate needs. Email me at rockrealtor@yahoo.com. Click the subscribe button so you and I can stay connected. Now, thank you so much for stopping by. I look forward to seeing you again soon. Have a great day, guys.